Assalamualaikum and a very good day to everyone. Today, our group would like to present financial position and financial performance analysis for the subject of INV536. Our group member consists of myself, Farah Nurzahiah Binti Sabri, Syazwina Asilah Binti Saifuddin, and also Nurulain Binti Rizal. For this assignment, we will discuss about three companies: KPJ Healthcare Berhad, Kossan Industri Berhad, and also Supermax Corporation Berhad. Based on the common size statement of the financial position, KPJ Healthcare shows no significant changes for the 3 years. There are new components under the non-current asset, which is right of use asset that started in 2019. The percentage is quite large compared to other components that contribute to the increasing in total non-current asset. For KPJ Healthcare, they depend more on non-current asset, which is a ratio of 4:1, and this can be an indicator for poor liquidity.
Thank you, Farah. Now let's move to the second company, which is Kossan Industries. So, as you can see right here, this is the common size financial analysis for Kossan with the formula of every items in financial position divide with total assets and times with 100%. For the part of assets, all of the components show consistency from year to year since there is no significant changes except for cash and cash equivalents and property, plant, and equipment. So, for cash and cash equivalents, it increases drastically from 6.83% in 2019 to 29.98% in 2020. The reason for these significant changes is the increase in cash or items that are easily converted into cash, which should not be a problem. Next, for property, plant, and equipment, it decreases from 50.77% in 2019 to 35.05% in 2020. The reason of this is depreciation, which affect the value of property over time. Even though it is common for properties to depreciate, it is still concerning since it drops drastically. Next, for liabilities and equities part, there is no significant changes from year to year, which indicates that Kossan is consistent in their liabilities and equities.
Thank you, Syazwina. Now I will continue for the company Supermax. As shown here, this is the data of common size financial statement analysis for asset item. And this is the common size analysis for liabilities items. For Supermax, there are 3 items with significant changes, which are cash and bank balances, property, plant and equipment, and payables. As for cash and bank balances, it increased by roughly 28% in 2020, which is from 9.43% to 37.02%. The possible reason is because the company has undergone a growth in sales that year. The higher cash sales, the higher sales account, as well as the cash account for the company. And this could be related to the impact of coronavirus that hit Malaysia in 2020. And the next item is property, plant and equipment, or PPE, that dropped roughly by 20% last year. The reason is because since 2018, Supermax may spend a lot of PPE that it reached roughly 50% in its common size, but the value of assets depreciate as time passed by, decreasing in 2020. And the last item with significant change is payables. In 2019, there is 23.43% increment. Payables is considered as liability, which is short-term financing. And an increase in payables causes the short-term financing increase as well, as most probably because the company purchases material from suppliers by credit. For conclusion, overall for the comparative analysis of common size, we decided to choose KPJ Healthcare as the company with the best performance among the 3 companies because for the past 3 years, KPJ Healthcare gained higher value in terms of mentioned items. And second, consistency. This will put investors and shareholders at a secure space if they want to invest in this company based on their overall stable and good performance.
KPJ Healthcare has an uptrend movement from all components from the year to year based on common size financial analysis. Index number trend is increasing from the year 2016. Although all components are moving in the positive directions, the sales component show a significant reduction in 2020, which is very alarming. It is believed to be because of the COVID-19 pandemic which hit Malaysia in 2020. Index number trend start to downtrend in 2019 and it is average for total operating expenses.
Thank you, Farah. So, this is the index number trend analysis for Kossan Industries, with the formula of item in current year divide with item in base year and times with 100%. Next is the graph for index number trend. The index number trend for Kossan is in uptrend. There are 3 components that have significant changes in 2020. No matter how significant changes they are still regarded as positive. The total operating expenses, on the other hand, are something to be concerned about. It is because the total operating expenses is expenses and expenses should be reduced. Therefore, Kossan must take action and explore the issue.
Next, this is the data of Supermax index analysis. The index number trend is uptrend for all of the items but total operating expenses. Moreover, for Supermax, the positive changes that we can conclude are a significant rise in sales, earnings before interest and tax, and earnings after tax in 2020. However, the fluctuation that happened in total expenses need to be controlled as it reflects the company's production management problem. Overall, after analyzing the index analysis, we found out that Kossan performs the best compared to KPJ and Supermax, since its index number trend is increasing each year consistently and reached the highest increment in 2020. Meanwhile, the worst financial performance is Supermax company due to its inconsistency of index number trend. Furthermore, several factors contribute to the trend pattern. For example, global pandemic COVID-19.
Last but not least, recommendation. First, KPJ Healthcare Berhad. The company must divide the amount appropriately among current assets since this company is heavily reliant on non-current assets. Next, minimize the risk of external elements and diversify its operations to compensate the drastic drop in sales in 2020. The second company, which is Kossan, this company must do a proper management of capital expenditure to compensate the drop in property, plant, and equipment. It is because investor can examine how firm handles their property, plant, and equipment to determine whether the capital expenditure will help or hinder the development of the company. Next, control total operating expenses since it increases drastically in 2020. And the last company is Supermax. Just like Kossan Industries, this company must take into account their property, plant, and equipment, since the drops in property, plant, and equipment shows that this company is lack in managing their capital expenditure. Next, total operating expenses should be kept under control by making sure that expenses are used to the fullest. Okay, that's all from our group. Thank you for your attention.